Get ready, crypto fans, because the market is absolutely electric right now. We're diving headfirst into a tidal wave of breaking news that's shaking up the entire crypto landscape. From critical support levels being tested to massive whale movements and strategic corporate plays, this is the episode you absolutely cannot afford to miss. The pace is relentless, the stakes are sky high, and we've got all the unfiltered insights you need to navigate this wild ride. Buckle up, because the Bitcoin Bulletin is going live, and we're bringing you the most crucial updates shaping the future of digital assets. First up, we're breaking down the latest on Bitcoin's price action. Is the bull run hitting a critical test? We've got the data on key support zones and what it means if they don't hold. Plus, we're diving deep into the sentiment shifts that could signal a major move. Next, get ready for the whale watch. We're tracking massive movements of Bitcoin and what it means for the market. Are the big players cashing out or repositioning? We've got the inside scoop on liquidations, ETF outflows, and the sentiment swing that's got everyone talking. And finally, we're looking at the corporate giants doubling down on Bitcoin. One major player is making huge strategic moves, adding billions to their holdings. What does this mean for their long-term bet on digital assets? Stick around to find out. Don't just watch the market move, understand it. Hit that subscribe button, ring that notification bell, and let's get into it. The bulls face a critical test. Bitcoin is standing at a crucial juncture, with its price currently hovering around $112,837, testing a significant support level at the 100-day moving average of $111,224. This is a pivotal moment for the bulls, as a failure to hold this line could trigger a more substantial correction, potentially pushing the price down towards the 200-day moving average near $100,597. The market sentiment, as indicated by CryptoQuant's Bull Score Index, has shifted from a bullish cooldown to a more neutral stance, moving from a score of 70 down to 50. This suggests that the strong upward momentum has waned, leading to a more balanced, albeit uncertain, environment between buyers and sellers. A further dip in this index could signal increased downside risk. This current price action follows a retreat from Bitcoin's recent peak of $123,217. While the cryptocurrency has been in a broader uptrend since the start of 2023, this period is characterized by heightened volatility and increased profit-taking. Analysts note that such behavior is common as bull markets mature. The market recently experienced a sharp 3.74% price drop, wiping out $623 million in liquidations, triggered by a substantial 24,000 BTC sell order. This sell-off was exacerbated by thin weekend liquidity and a buildup of leveraged long positions. Whale investors have been particularly active, realizing over $74 billion in profits since mid-July, indicating a strategic move to secure gains. Despite these large profit-taking activities, the overall market structure is still considered constructive, though demand has softened compared to earlier in the year. The next few days are critical. The $112,000-$115,000 zone will be key in determining Bitcoin's short-term direction. If Bitcoin can maintain its position above the 100-day moving average, a rebound towards $118,000 and a retest of the $123,000 resistance level are possible. However, a break below $111,000 could accelerate a downward trend. The broader economic landscape, including interest rate decisions and institutional investment trends, will heavily influence Bitcoin's ability to overcome this consolidation phase and avoid a deeper downturn. But is this just a temporary pause or the start of something bigger? We're diving into the whale activity that's dominating the headlines next. Whale selling overshadows Fed optimism. Bitcoin is facing significant headwinds, trading in the $111,500, $112,700 range, as massive whale selling continues to overshadow positive signals from Federal Reserve Chair Jerome Powell's dovish remarks hinting at future rate cuts. The market experienced a dramatic weekend flash crash, liquidating billions and impacting over 160,000 traders, with more than $550 million in long positions wiped out. A single 24,000 BTC sell-off was a major catalyst, highlighting Bitcoin's vulnerability to large holder actions. Technically, Bitcoin is showing caution. It has rejected a broken trendline and fallen below its 100-day exponential moving average, EMA, at $110,865, increasing the risk of further declines towards the 200-day EMA, which sits near $103,600. The Relative Strength Index, RSI, is around 40, indicating bearish momentum is building, and the MACD indicator has registered a bearish crossover. For Bitcoin to regain strength, it must reclaim resistance at $116,000 while holding the $110,800 $112,000 support zone. Failure to do so could lead to a correction towards $108,000 or even $103,000. Further exacerbating the selling pressure, a prominent Bitcoin OG wallet moved over 22,700 BTC, valued at $2.6 billion, to exchanges in the days leading up to the crash. This wallet also shifted a significant portion of its holdings into Ethereum, raising concerns about short-term sentiment among major holders. Adding to the negative pressure, institutional flows via spot Bitcoin ETFs saw outflows of $1.17 billion last week, the worst week since early March. Continued redemptions could force ETF managers to sell more Bitcoin into an already sensitive market. Despite these challenges, some analysts see potential buying opportunities. Bitcoin's 30-day MVRV ratio is near -3.37%, approaching a historical reversal zone near -4%, suggesting potential undervaluation. Meanwhile, corporate buyers like Japan's Metaplanet remain committed, recently acquiring another 103 BTC and increasing their total holdings to nearly 19,000 BTC, underscoring a long-term belief in Bitcoin as a store of value. The path forward for Bitcoin heavily depends on stabilizing above the $110,800 $112,000 level and easing selling pressure. Key factors to watch include ongoing whale activity, ETF trends, and Federal Reserve policy direction, all of which will determine if this is a minor setback or the beginning of a deeper correction. With major players making significant moves, what does this mean for the corporate adoption of Bitcoin? We're breaking down MicroStrategy's latest high-stakes strategy next. MicroStrategy's high-stakes Bitcoin strategy. MicroStrategy, the largest corporate holder of Bitcoin, continues its aggressive accumulation strategy, recently adding $357 million worth of BTC to its portfolio. This latest acquisition brings the company's total holdings to an impressive 632,457 BTC, valued at approximately $46.5 billion, with an average acquisition cost of $73,527 per coin. The funding for this purchase came primarily from a $310 million common stock issuance, with an additional $47 million raised through preferred shares. These preferred share offerings have raised some concerns among analysts regarding the company's long-term dividend sustainability and potential reliance on future stock issuances. While the dollar amount is substantial, the pace of MicroStrategy's Bitcoin accumulation has slowed considerably. In August, the company acquired 3,666 BTC, a significant decrease compared to the 31,466 BTC purchased in July. This moderation in buying activity has fueled speculation about whether MicroStrategy is strategically pausing or adjusting its approach in response to current market conditions. Despite this slowdown, CEO Michael Saylor remains steadfast in his long-term conviction, famously advocating a buy-the-top-forever philosophy. He has also updated the company's 2025 targets, raising the projected Bitcoin yield to 30% and anticipating gains of $20 billion. Even with Bitcoin's recent price dip to around $112,000, MicroStrategy has maintained its confidence in the long-term value proposition of the cryptocurrency. The company's year-to-date gains on its Bitcoin holdings are substantial, reflecting the success of its aggressive investment strategy. As the market navigates through price volatility, MicroStrategy's unwavering commitment positions it as a bellwether for institutional adoption and a testament to the belief in Bitcoin's potential as a significant asset. This corporate conviction is strong, but what are the broader macroeconomic forces at play? We're exploring Bitcoin's role as a hedge against currency debasement next. Bitcoin as a hedge against currency debasement. In an era of fluctuating global economies and concerns over currency debasement, Bitcoin is increasingly being viewed by institutions not just as a speculative asset, but as a critical hedge against inflation and a store of value. The persistent printing of money by central banks worldwide, coupled with geopolitical uncertainties and rising national debts, has created an environment where traditional fiat currencies are losing purchasing power. This macroeconomic backdrop is driving a significant shift in institutional thinking, leading many to explore alternative assets that can preserve wealth over the long term. Bitcoin's fixed supply, capped at 21 million coins, stands in stark contrast to the inflationary nature of fiat currencies. This scarcity, combined with its decentralized nature, makes it an attractive proposition for investors seeking to protect their capital from the erosive effects of monetary expansion. As inflation rates remain elevated in many major economies, the appeal of Bitcoin as a digital gold alternative continues to grow. Institutions are increasingly allocating capital to Bitcoin, not necessarily for short-term trading gains, but as a strategic diversification tool to hedge against the systemic risks associated with fiat currency devaluation. Furthermore, the increasing adoption of Bitcoin by corporations, the development of regulated financial products like Bitcoin ETFs, and the growing acceptance by a wider range of investors are all contributing to its maturation as an asset class. These developments are solidifying Bitcoin's narrative as a reliable store of value and a potential hedge against currency debasement. As global economic uncertainties persist, the role of Bitcoin in institutional portfolios is likely to expand, driven by its unique properties and its growing acceptance as a legitimate financial instrument capable of safeguarding wealth in an unpredictable economic landscape. That's a wrap on the big stories. But before you go, let's do a quick recap of today's top headlines. And that's a wrap on today's essential crypto updates. We saw Bitcoin testing critical support levels, massive whale selling impacting the market, MicroStrategy doubling down on its BTC strategy, and the growing narrative of Bitcoin as a hedge against currency debasement. Don't miss out on any of the action. Make sure you're subscribed, hit that notification bell, like this video if you found it valuable, and follow us on all our social channels for even more real-time updates. We'll see you in the next one.